Well, after coming off a massive year for mining and metals, we continue to see precious metals hit record highs this week. However, as AI demand and deglobalization continue, the 2026 market could look markedly different. For more on that, we're joined now by Helen Amos, Managing Director and Commodities Analyst at BMO. It's good to have you join us. Thanks so much for taking the time.
Good afternoon, and thanks for having me.
So just before we look ahead to 2026, we did see that growth of gold, silver, platinum, even huge growth in 2025. What are some of those factors behind that upswing that you think might carry over into 2026?
Yeah, look, it really is an incredible time for metals. 2025 was already a spectacular year for our space. We saw returns of 60 to 150% in precious. Copper itself was up 40%. And this year so far, already off to a very strong start. So silver, platinum, and copper are very much leading the pack so far. But what's more, we don't think this cycle is close to being over. So we actually see further upside across most of the major metals for into 2026. But our most preferred metals, they have the strongest fundamental story. That's copper, aluminium, and gold. And not just the strongest fundamental stories, but new money pouring into the space. So we're suggesting to clients it's far too soon to fade this rally. And of the drivers, it's the macro drivers like the weakening US dollar, strong emerging market demand, deglobalization, but also the very strong micro stories that we're seeing for particular metals, particularly copper.
Yeah, let's talk a little bit more about copper, because that's been an interesting one. We're seeing it this week, reaching new record highs once again. I take it you obviously expect that to continue into 2026. You went through some of those kind of key factors that were driving things into 2026. Does that apply to copper in terms of what's driving that price higher? Is it mostly supply and demand issues?
Yeah, absolutely. Look, copper's got a great demand story. It feeds into lots of end-use applications for future-facing sectors. So renewables, grid, data centers, defense, feeds into reshoring of manufacturing demand, but also strong emerging market demand, particularly India. But also not just that, but we're really seeing these frictions in the supply base starting to come to the fore. We've had some major mines come offline or reduce production. So at the end of the day, it's very difficult to bring new supply online. So I think we've got a really good story for copper into next year. The other thing that's particularly affecting copper is that we're seeing this really big inventory builds taking place in the US. This is driven on by anticipation of future import tariffs, still very uncertain. But at the moment, the inventory levels of copper keep rising. And really, as long as we've got this prospect of import tariffs, we don't see an end to this. And that's basically drying up liquidity inventory in the rest of the world and keeping prices very well underpinned.
Yeah, I just want to touch on that in terms of how the prospect of potential tariffs are affecting the price of copper, right? Because there's that review coming up in the summer where the U.S. might reinstate those tariffs on copper. What's happening now? Is there a rush to get more copper into the U.S. because there's a potential tariff coming?
Yes, absolutely. So the tariff is not in place yet on refined. The recommendation from the government has been that from only 2027, there should be a 15% import tariff on refined. However, the expectation of that tariff in the future is already being reflected in the difference in the price between the US price and the rest of the world price, and that is resulting in a profit opportunity. Physical traders are bringing metal into the US. And as I said, that's continuing the dynamic from here.
You touched on this a little bit, but we're also seeing that AI advancement closely linked to the mining and metal sector, right? The equipment needed for a lot of data centers, for example, uses a lot of copper, a lot of silver. Is that going to be something that affects the price of some metals heading into 2026 as well?
Yeah, absolutely. I mean, look, data centers themselves might today only be a small share of global demand. So some people estimate copper data center demand directly is only maybe 1% today. But the fact is it's keeping money flowing into the space. So it's bringing generalists into metals and mining. There's a very strong story. Obviously, ahead of us, we've got a strong pipeline of data centers that are still being built out. So I think, it's definitely keeping generalists and money in the space, and it's contributing to a strong supply-demand story as well. We're certainly not seeing any upside surprises to supply. And really, when we're looking at the landscape for demand, all we're seeing is new applications. And so that, benefits copper, it benefits aluminium. As you said, it benefits the likes of silver and other critical minerals too.
And as you've outlined in your 2026 report, iron ore could be a solid investment this year. Why do you think iron is being overlooked, and what's driving your optimism around that metal?
Yes, so iron ore is eternally the overlooked metal. I would say there's this very bearish narrative that has been in the mainstream on the commodity for many years now, but it's also a commodity where consensus has been consistently too conservative. So we've done a lot of work on iron ore, actually showing that really it's much less about the demand side. So sure, iron ore might not be the commodity that benefits so directly as copper from like AI, say, and grid and data centers, but really it's got very, very favorable supply side characteristics. It's a very consolidated industry, so there are a few industry players, and what we're seeing essentially is capex discipline or restraint. So that's keeping prices well above the cost curve, and it's a very efficient market as well. So it's got a steep cost curve tail. So when prices do wobble around, you tend to see marginal supply exit very quickly. So for us, we're also in a very good seasonal sweet spot for iron ore this current quarter, and also some of the other steelmaking raw materials like met coal. So we're actually highlighting to clients that this could be like a little bit of a surprise into this year.
Very interesting, and definitely something to watch for. Okay, that's all the time we have, but appreciate you joining us today and sharing your insight. Thanks so much.
Thank you.
That's Helen Amos, Managing Director and Commodities Analyst at BMO.